All right, let's jump right in. Today, we're cracking open one of the most important books on finance ever, Benjamin Graham's The Intelligent Investor. Why? Because we need to answer a question that gets to the absolute heart of how we should think about the markets. And honestly, it's a question that pretty much defines your entire financial future.
Wow. Let's just start with this quote, because it really hits hard, doesn't it? This isn't just some clever little saying. It's a serious warning. Graham is telling us, straight up, that the way you approach the market determines who gets rich from your money. The stakes are incredibly high.
And that really leads us to the big question for today. It's something you have to ask yourself, and you have to be honest about it before you ever put a single dollar on the line. Are you actually investing, or are you just speculating?
Now here's where things get tricky. That line between investing and speculating has become, well, incredibly blurry. As Graham points out, on Wall Street, if you buy or sell a stock, they just call you an investor. But that simple little mix-up, it's actually really, really dangerous. I mean, just think back to the dot-com bubble in the late 90s. It was the perfect example of everything Graham warned about. America basically became a speculation nation. Patience went right out the window because everybody wanted to get rich now. People weren't investing in actual businesses, they were just gambling on ticker symbols, hoping for that one big score overnight.
Yeah, the speculator's world is just this chaotic whirlwind of activity, right? It's all about day trading, flipping whatever fund is hot this week, chasing the latest trend. It feels super exciting. And hey, for a little while, it might even feel like it's working. But Graham is crystal clear. These are tactics built on pure emotion and luck, not a solid game plan. It's basically a casino, and we all know who wins there in the long run.
So how do we cut through all that noise? How do we find some clarity? Well, let's turn to the man himself, Benjamin Graham, the father of value investing. He gave us a simple but absolutely brilliant rule to separate real investing from, well, everything else.
And here it is. This is the core idea. You'll notice three key parts here. First, thorough analysis. That means you actually have to do your homework on the business. Second, safety of principle. Your first job is to not lose your money. And third, an adequate return. You're aiming for something reasonable, not trying to win the lottery. If what you're doing doesn't tick all three of those boxes, Graham says, it's simple. You're speculating.
So you can really see the two different worlds here, right? The investor is grounded. They're looking at the actual business, its value. They're patient, they're disciplined. The speculator, on the other hand, is just gambling on which way the price will wiggle. They're totally driven by hype and fear and whatever the market is screaming that day. One is based in reality, the other is just lost in the noise.
All right, so why does this distinction matter so much? Well, because history shows us that the public, as a big emotional crowd, has a truly terrible track record. Following the herd is almost always a path straight to disappointment.
I mean, just look at this timeline. It's kind of wild. Back in 1948, after the market had gone nowhere for years, pretty much everyone was scared of stocks. They called them a gamble. And what happened right after that? Boom! One of the biggest bull markets in history takes off. Okay, now fast forward to the late 60s. The market's been on a tear, and now everybody's excited, they're rushing to get in. And of course, what happens next? The market is about to go into a long, painful slump. The lesson couldn't be clearer. The crowd is most afraid at the exact best time to buy, and they're the most greedy at the absolute worst time.
Okay, so that's the problem. Let's talk about the solution. Graham knew that most of us don't have the time or the desire to be professional stock analysts, so he came up with a simple, really powerful game plan for what he called the defensive investor.
I absolutely love this phrase, safety plus freedom from bother. The whole point here isn't to be a genius and beat the market. It's just to get solid, dependable results without all the stress and constant worry that comes from speculating. It's a strategy that lets you live your life instead of being glued to a stock ticker all day.
So where do you even start? Well, Graham recommended a super simple 50-50 split. Half your money in a diversified basket of stocks and the other half in high-quality bonds. This isn't some magic formula, it's just a disciplined starting point. It makes sure you get to participate in market growth, but you also have that stable cushion from bonds when things get rocky. And the policy for managing this is just brilliant in its simplicity. You stick to your split, but you give yourself some wiggle room. When the market goes way up or way down and throws your portfolio out of whack, you rebalance. This one simple action forces you to do something that feels totally weird but is incredibly smart. You are automatically selling stocks after they've gone up and buying more after they've gone down. It takes all of the emotion right out of the equation. Okay, this brings us to our final, and you know what? Probably the most important point of this whole discussion. The real fight for success in investing, it isn't happening on Wall Street. It's happening inside your own head.
There's this legendary story about the great financier J.P. Morgan. Someone asked him what the stock market was going to do, and he gave this perfect, simple answer: it will fluctuate. And that's it. That is the only prediction about the market that will ever be 100% right. So any strategy based on trying to predict those fluctuations is doomed. The only strategy that works is one based on controlling your own behavior in response to them.
And that's the ultimate secret weapon. You do not need to be a genius to be a successful investor. What you need is the right temperament, the ability to stay calm, to be disciplined when everyone else is either panicking or getting greedy. That is so much more valuable than any fancy spreadsheet or complex theory. So we'll end right here with this question for you. After all this, where is your energy really focused? Are you trying to guess the unpredictable whims of the market? Or are you focused on mastering the one and only thing you truly have control over, your own actions? According to Benjamin Graham, making the right choice on that question is the single most important investment decision you will ever make.